Hello, 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 everyone. How is everyone doing today? Mike Arnold here, co-founder of Path Trading Partners, along with not yet here, Bob Iaccino. So we will wait for him to join, but until then, I can get all the house cleaning stuff out of the way. By the way, if you are new here, please consider subscribing, ringing that bell, and hitting the like button. Longer term viewers, subscribers, and members, please hit that like button and leave some comments. So what do we think about the price action today? Many people caught off guard by the sell-off, but I was able to capitalize with some great Tesla and ES shorts. Thank you, Mike. This stuff with the harmonics and gain levels is life-changing. It does work very well. And to think you can learn a lot of it completely for free. Hey, Tesla Force, how you doing? Options 22 with the Triple H. The Triple H. So, once Bob joins, I will bring him on. You can see the heat map today. A lot of healthcare was, again, doing okay. Consumer defensive. Doing good. Some of your mega caps and the high flyers, banks getting beat up a little bit. Mega caps and high flyers getting beat up a lot today. William, can we do Apple in the stock segment? Maybe we'll glance at it here if we have some time, but if not, please join the stock segment. Doing great. I am just feeling tired this week. I am feeling tired. I will not lie. By the way, we had a lot of data out today. We went over continuing job, continuing job claims and initial job claims. Let's see, I'm just looking for Bob. It has been a long week. Yes, it has. Glad it's over tomorrow. I will be too, but it never ends with the videos. We had Powell talking today. We had ISM non-manufacturing PMI with a huge miss. Then there's a lot of ISM, the subcomponents, and a number of them missed also, and some stuff like employment into contraction. Below 50 is into contraction, by the way. Let's see. What else do we have? We have still coming up at 5 p.m. Fed Williams is going to be speaking. So that's what we had. But tomorrow, let's take a look at tomorrow. Remember, non-farm Friday. Non-farm Friday, so we will see how that comes in, and plus our earnings are going to be really looked at, and things like the participation rate. So that's going to be the morning. So I'm going to have to do a live stream tomorrow morning, the market preview show. Keep that in mind. FOMC pretty much still baked in that 25 basis point hike. So please do not ignore that. With tomorrow morning, we could get some more volatility in the markets. Let's see. I want this market to go down 500% at least. Well, Rich, don't be so positive. Don't be so positive. What is going on, Rich? So, how did Powell talk go? We're still expecting a 25% increase. Yeah, Powell. I was going to talk with Bob about that. Yeah, here comes some better late than never. Oh, wait, hold on. I'll get to Bob when I get to Bob. He can wait in the background since he doesn't have the courtesy to show up on time. I wonder if he can hear me though. He's shaking his head in the background. I'm just
Looking
messing
for the
with him.
hang up button.
We'll get him on. Oh, it's only 50%. You only want to see a 50% drop, not a 500% drop. We're just calling for a 500% drop. With that, let me change the cameras around. I gotta make some changes here. Bring me in. Bring Bob in. Make some changes. Get rid of some comments. There we go. Here we go. There we are. There we are, and there's Bob with the pink shirt and the smile to go on top. Could go with the pink shirt. Let's see. Didier wanted to know, how did the Powell talk go? Are we still expecting a 25 basis point increase, Bob?
Pretty much confirmed it. One of the takeaways from the Powell talks was he basically said that it's too early to say if the geopolitical situation is going to change them from their current playbook, which he then basically reiterated is 25 in March, and then decide from there. So I haven't looked at the CME FedWatch tool. Have you, Mike?
Yeah, it was. I can pull it back up.
Got to be like 97 or 98%.
It's 97.8%.
There you go. So I mean, I'm just as right as always. So
I'm not commenting.
yeah,
on that.
that's
No comment.
It's going to be 25. That's what it's going to be.
Yep.
Gets above 95%, and it's basically that's what's going to happen.
What did you think about his testimony yesterday and today?
Today, I actually tweeted, is Elizabeth Warren actually going to ask a question about something the Fed has authority over?
I saw that.
Yeah, that's what I think of these things. They're stupid. They're just these testimonies. If they wouldn't televise them, you might actually get, honest financial reporters reporting news that actually mattered to the markets. The only thing the market was looking for today was if he made any sort of changes to his idea based off of just one day's price action that they were going to do 25 and go slow from there. He said we got to maintain flexibility. He said all the typical stuff, but most of the questions were political in nature. So yeah, I watched it, but I had it on in the background. I didn't really care.
It's still interesting because he also said if we had known inflation wouldn't improve, we would use tools sooner. Aren't they still buying the? I mean, you could have cut that off. You could have literally cut that off, or at least kept downsizing it. So they had tools to use without the hikes.
Yeah, they could have downsized quantitative easing at any point in time. They could have announced it. Their whole thing is they don't want a taper tantrum. The market's already going lower, or it has a low, like a downward bias to it still at this point, I think. So he's become a political animal, and I don't blame him, but that's what he is. So
let's see. Where do we have Ted, we'll take a look at some of this. Ted, we'll take a look at some stock stuff in the stock segment today. So if you could join that one. I want to save the time to get Bob's thoughts on a lot of stuff. If we have some time after, we'll do that. Powell, highly uncertain how Russian attack on Ukraine will impact U.S. economy.
Right.
Besides higher fuel prices, which are already ramping up, and we have crude pulling back, finally a little pullback, but now the support shelf's at 100. I mean,
hey, real quick, because I've got an earlier stop than normal. Did you pull up that chart that I sent you yesterday, Mike?
I have it. Look at this. Am I prepared or what?
Yeah, it hasn't changed much. I was hoping you would pull it up yesterday, but it didn't change at all. We actually went a little bit flatter, but the dates are still the same.
Well, my head's in the way. My bulbous head is in the way. There we go.
It's basically, you could blow it back up again now, because basically the red line is where we are today on the 210 spread. St. Louis Fed hasn't bumped it up yet, or actually put in this week's 210, but the 210 right now is where that right arrow is. Now, if you want to blow it up, that we haven't seen this level since the pandemic recession, shortest recession on record. But notice that the yield curve went inverted, and then we were at this level. So we were at this level prior to the yield curve going inverted, and then the yield curve went inverted, which is the black line there. You can see, I can't see when, right there. And then the last time we were at this level was during the pandemic recession. So this particular flattening of the curve is very similar to the flattening of the curve we saw prior to the inversion of the curve, except it's a lot steeper getting there, right? So this is something you guys have to know. The flattening of the yield curve to this level hasn't really happened so quickly prior to an actual Fed move. This move in the yield curve that you saw prior to the pandemic recession was when the Fed in 2018 was actually tapering and had actually started to raise rates already. So they started to raise rates in 2018. The yield curve started to flatten. This is the flattest we've been without a prior Fed rate hike, I think, ever. I think ever. So the prior What's the year right there, Mike? Can you
Oh,
show me
oops.
the year? I'm sorry. Can you show me the year on that all the way to the right or to the left, rather? Actually, I have it handy as well.
Hold on. Sorry, I was trying to. I got a little click happy.
Don't get click happy.
I got click happy. And you see what happens when I get click happy. Here you go.
What year is that all the way on the left there?
All the way where?
The
Here?
very left of that chart.
The very left is 2017. Right
All
in
right.
here.
So the Fed hiked rates in, I believe it was 2018 is when they started to raise rates. I could be wrong on the exact dates on that. So again, the curve wasn't near as flat. It moved down very sharply. We have an inversion in the 20s to the 30s, which we did not have prior to the last rate hikes. And the steepness of how flat the 2s, 10s have gotten hasn't happened without a rate hike involved in the past. It's never happened before. So my point being, I can show you one other thing, but that's okay. It's actually old news at this point. IHS Market Composite PMI. The EU, China, and the US are all in a downtrend. You don't have that chart, Mike? And the US has now gone lower than the EU and is about to surpass China.
I don't have the chart.
I didn't send it to you.
You can send it to me and I can bring it up.
Yeah, I can send it to you real quick. I think I have it in my downloads. Yeah, here it is. All right, I'm going to email it to you real quick.
All right. Just waiting for it to show up. This email technology taking forever. But let's go through options 22 says, hello, one and only legend, Chef Bob. Rich says, Powell was playing with us. You can't just print money forever. Isn't there a theory that you can print as much as you want with the modern monetary theory?
There is a theory that you can do that forever.
I don't think that theory is going to hold up.
That theory is still going on in Japan, I believe.
Yep, the theory is. Let's see. I'm still waiting for greetings, good sir Bob. Do you still see the market in a chop down mode as you stated a few weeks back?
Say that again, please.
Do you still see the market in a chop down mode as you stated a few weeks back?
I do.
Choppy,
I mean, I don't think we're looking at charts, right? I mean, I don't think I emailed you that other chart, but if you want to put up any of the major indices, the S&P, yeah, I mean, we're still not through the rotation zone. We're not through the 200. We're not through the trend line. We're not through a bunch of Mike's resistance. So yeah, I still see us rotating back down and continuing lower. I see us testing that lower trend line. I really do. Now, I could be wrong. Now, by the way, I don't have any trades on reflecting that, but there it is. So IHS Market Composite PMI is a really good indicator. It's because, first of all, because it's composite. And the other reason is because the IHS reports on all the major economies right around the same time, right? So it's not like the US PMIs or anything, which are good. They're very good data sets. But when you want to compare economies, this is a good one to look at. And you look at the composite because basically it blends in manufacturing and services, where you could look at the EU as being maybe 60% services, 40% manufacturing, and that's much skewed by Germany, by the way, being such a big manufacturing hub for them. China is mostly manufacturing, and then obviously we are 70% services, which brings me to the State of the Union. Should we do that? How do you tell businesses to cut their costs and raise wages in a 70% services economy?
It doesn't work. That's the thing.
Right. So the State of the Union was fantasy economics. Now, the red line is the U.S. IHS Market Composite PMI. The light gray line is the EU, and China is in the black. And you can see a clear downtrend after peaking during the first couple of stimulus checks in late 2021. I'm sorry, in late 2020, and then again in early 2022. Late 2020, then late 2021, when the second batch of stimulus checks came out. You can see those little spikes. Well, there's no stimulus now, right? No fiscal stimulus, no checks being mailed out to people that they can spend. Now, I will say that I think that the lifting of mask mandates in major cities and places like that will cause another little bump up. But inflation is biting down on people, so it's not likely to be as long lasting. It's not going to feel like they have free money to spend, especially if crude oil doesn't calm the F down. Research shows $4 a gallon national average in the gas average in the U.S. is when people start to alter their behavior in terms of fuel. I looked at Gas Buddy today, and we're like about 398, 388, somewhere around there. Illinois is between 410 and 420 already, depending on which county you're looking at. I think the statewide average is like 404. Down here in Florida, the statewide average is about 368. Where I'm at, it's about 371. So we're getting there. And this is just based off of 3 days of crude rally. It doesn't include today, obviously. So the Fed is still tightening into a slowdown, but they might get a temporary spike in activity, again, because the lifting of the mask mandates pretty much nationwide, right? We had 50-degree weather in Chicago today, and I did an interview on TD Ameritrade's network, and Oliver, the host, was like, it was like a whole new city yesterday. It's 50 degrees out. The mask mandates are gone. People were out all over the place.
That was yesterday, not today.
That was yesterday.
Today was cold.
Yeah, that was yesterday. And the funny part about that to me is, so you got that, and then anybody who's ever lived in Chicago or many cold weather cities know that when the spring comes around, things spring to life, no pun intended. So you combine that with the mask mandates being lifted, and you probably get like a double whammy of people wanting to go out and spend money. Having said that, inflation is going to cramp that down. So I think the Fed is still tightening into weakness. The data has been decent this month so far, and I think equities are going to feel it. If I'm right, they need to be repriced. If the Fed overshoots, it's going to be good. It's going to actually affect inflation because there's going to be an economic slowdown that I believe is going to push inflation down a little bit. But nothing can affect commodities. Nothing the Fed does is going to affect commodities. Christoph is talking about the skyrocketing costs of energy in Europe. Natural gas in the EU yesterday hit the highest level ever. We're not seeing that here yet, Christoph. We're not seeing it in natural gas. Natural gas was down 84 basis points today. Natural gas is actually the volatility in U.S. natural gas futures as recognized by the CME CVOL index. If you look at the CME Group CVOL index of natural gas, it's actually, the volatility is almost cut in half from the beginning of February, and natural gas prices are at lower levels, and the volatility, the ranges have shrunk. So we're not seeing that in the U.S. yet. But it doesn't matter. All that's going to do on the chart that Mike just had is going to turn the EU lower, and the EU is an important global economy. So there's a chance for it to help the Fed out on the inflation front. But we've talked about this before. We've got 7 to 8% inflation. What's a win? 4.5%, 5%. Today, a Republican senator specifically asked Powell, one of your mandates is stable prices. What do you consider stable prices? He said 2%. We're really far from that. We're a lot of rate hikes and a lot of economic slowdown away from that.
And you have to undershoot to get us back to an average of 2% or his adjusted average or whatever is average, the way ever they adjust it. You actually have to probably get a deflationary environment slightly to get it down quicker. Because if you start printing 2%, it doesn't change the average that much. It will lower it, but it doesn't quickly change it.
Yup.
So that's their problem. They actually have to go to like 0 or less to get to start moving that average down. And even at a few 0 prints, we could get a couple 7% print, massive prints still. And especially with what fuel's doing by the time that ripples through everything. And the housing stuff lags.
Yeah.
That. And so that's about a 6-month lag. So that isn't even showing up full force yet.
And also, I don't know if you guys caught this, but today Powell specifically mentioned how the moving of rates should slow down the housing sector, which means that it's a target for them in a way. They want the housing sector to slow down.
So, Wavy Powell in near-term entry prices will clearly push inflation up further. Yep, and will be appropriate to continue to proceed with rate hikes through the course of the year. So we will have to. I mean, he's making it pretty clear now. Whether they waver or not is another question. But if inflation's really getting entrenched at this point,
Yeah, it is.
So I mean, we've already talked in the past about a rock and a hard place. What's getting to a very tight little window, and I think they're still thinking they can engineer a soft landing. I don't know how they're going to do it because
I really don't either.
they've really messed this up so far in my book.
I agree.
And so now they're all going to work themselves out of this mess with an exact like touchdown, like just threading that needle. Especially with stuff they can't control. You just talked about stuff they can't control.
I was bragging to my father-in-law because 2 days ago I told him to go fill his gas tank up, and he's like, I'm tired. I'm like, you're going to be so crabby if you see where prices are going versus where they are now. So he finally is like, all right, fine, I'll go. I don't really want to go, but I'll go. And again, he's like a typical old guy, right? He's super cheap. So he sends me this. He's like, they haven't gone up yet, right? I don't know if you can see this. This is the sign of the one he goes to. Looks like it's between $3.59 for biofuel to $3.99, right?
Yep.
Today I sent him this. AAA. There's DuPage County. Can you see it, or is it blurry?
It's blurry, but just read what it is.
It's basically 411.16.
Okay.
411.6. So that hits for real. That hits people for real. And that hits the economy for real. And that hits earnings for real.
Yep.
So the Fed they have to act. They can't let this happen. They need to actually slow the economy significantly because there's commodities they can't do anything about.
Well, here's wheat. I mean,
that's the one Christoph warned us about, right? Was ags.
That is brutal. And I've been bullish on ags for a while with this. I mean, we were limit up, and halt there, closing in on the next cluster. But I mean, this at some point will pull back a bit, but it's not going. I mean, there's your chart.
Yeah,
that's not pretty.
No.
I mean, we could get a pullback, but you were already in a really nice, look at this uptrend channel. So if we just draw the uptrend channel. Look, just to return to the other side of the uptrend channel, that's not that positive.
No, and you're still in an up channel, even if you return back into it. That's the thing about these stuff. Somebody says over here, it seems like only the technicals matter. Do you see that question, Mike?
Yeah, that's options 22. Seems like nothing really matters up and down. It's all about the technicals, double tops, double bottoms.
All right, so that's why we trade these things. That's why we trade the technicals, because they're more reliable than my opinion on the fundamentals, or really anybody else that I know. It's much more reliable to look at the technicals. And that's why when you look at charts like this is the whole reason I'm not on CNBC anymore. CNBC called me one day. We were supposed to talk about crude oil, and they said, we changed it to copper because copper's up 7%. I said, okay, fine, I'll talk about copper. And they said, well, we need you to come with a trade. I'm like, you just said copper's up 7%. It was up 3% yesterday. They said, yeah, we need a trade. I'm like, I'm not giving you a trade. What do you want me to do? Buy copper up 10% in 2 days, or sell copper up 7% in 1 day? There's no pattern here, so I'm not giving you a trade. So, well, you have to have a trade. I said, okay, fine, I'll come on with a trade. So I went on and I said, if copper drops 9.25%, I would consider buying it. They got so pissed at me. They were so pissed at me. And I said, then don't call me anymore. I'm not doing that. It's my face on there, right? So it's not that those things don't matter, options 22. It's just sometimes the people who don't look at technicals at all get whacked out of their fundamental minds and they drive price moves like we've seen the last couple of days.
Hey, well, we're speaking of that. Do you have a wheat trade for me?
No, I don't. I won't come on here anymore if you need a wheat trade.
Can we buy this little gap if it fills? Can we buy the gap?
Sure. Go ahead. Enjoy yourself.
You won't come on here? Oh, well, there goes
All
the
right. Is
channel.
there anything that's specific to me before
Yeah, let's see. Good afternoon, Ahmet. Let me just see. Oh, Bob, before you go, do you think that high commodity prices may mark the start of a recession in the near future?
Yeah, I do. So I've been talking with the people for the CME for about 16, 18 months about a commodity super cycle and whether it was possible or not. And these are the kinds of things that drive those cycles. I think we're 3 years in, maybe. I don't know, Mike, do you have a commodity index of sorts?
Here's the Goldman Sachs commodity index.
All right. So where was the turn? It looks like it was
Hold
about
on, let me get to a
2020.
weekly chart. The major turn was in the low April 20,
All
April of
right. So
20.
things have names, right? And first of all, when I was coming up, and Mike too, a recession actually had a definition. It was 2 consecutive quarters of negative GDP growth. That quantified a recession. That's no longer the case of what's taught in economics or talked about in the markets. It's whenever the National Bureau of Economic Research says a recession happened in hindsight. Okay. So, from a perspective of whether we're going to see 2 consecutive quarters of negative growth, I believe we will. Now, remember, that's just growth. GDP can stay elevated versus pre pandemic levels, but if the growth turns negative, all right, so think about it. GDP is actually a number that they either add or subtract to every month. Okay. You can actually go on Fred and look up the absolute level of GDP. Okay. A recession doesn't mean that we've now got less gross domestic product than some prior year, right? It just means that the growth has turned negative, right? So we could be well above pre-pandemic levels, but be in a recession. So once that is cleared up, I do believe we'll have a recession based on the old definition I used to know. And I think it'll happen in 2023. So I don't know if that's soon for you. But the other thing that's important to remember is stocks are usually going up while the recession is going on. So if you're a stock market investor, don't fear recessions, like welcome them, look for them. Your stocks tend to go up prior to and during an economic recession. So you should be loving that. Now you might be out of a job because of a recession, so that would suck. Right? You got to worry about that.
Then you should become a day trader.
Well, you can become a day trader. A recession is an economic phenomenon. It's not a stock market phenomenon. We look for corrections in bear markets.
Let's just get to. I'll take a look at that once Bob's off, Christoph. But let's see. Christoph was on a call. Global veg oil market. Ukrainian sunflower oil exports are roughly 20% of global veg oil trade flows. Markets were already tight. Now it's absolutely impossible. And then keep in mind we're heading into Ramadan in May. Lots of Arab countries need to go buy now to build stocks before. So there's just pressure all the way around with this.
It's everywhere. Yeah, it's everywhere. Again, Christoph I'm glad he's here because he's talking about some stuff that like I wouldn't be talking about. I don't know that stuff. Not to the level that he does in terms of the detail, but all we know is the commodity super cycle is being driven by multiple factors, by too much money in the system, by supply chain issues, by explosive demand post-pandemic, and now by a war in a commodity-rich region of the world. So if you think this turns around, well, then you think all 3 of those things turn around quickly, and they don't. They won't.
And here he said call up a TFM futures chart for perspective on European natural gas prices.
Wow.
There's your
all-time
chart.
record highs, those last 2 highs. All-time record highs for gas prices in frickin' February.
Yeah, see, here's the longer term, and this is crushing stuff.
It's insane.
That is insane. Thank you for that, Christoph. I'm really glad to have you as part of the daily. We got a lot of good people here, Bob.
We do. And by the way, I interviewed Charles Payne yesterday from Fox News for about an hour. When I get that edited, I'll send you guys a link as to where you can watch it, or maybe I'll even send a copy of the edited video and we could post it on Pure Exposure and on this channel as well. Yep. He had some really, really cool insights about the politics of what's going on, as well as his opinion of Bitcoin was great.
So anything else you want to touch on? I know you said you had to go.
No, that's it. My Bitcoin theory that I talked about with Charles Payne is did I go over that in here or no?
What's your Bitcoin theory?
Well, basically that what happened with again, I'm not taking a political stance here. What happened with the truckers in Canada, where their assets were frozen without any sort of trial or any sort of again, not a political comment, without any sort of charges and conviction where the punishment, the judgment was made. What do you call it when a judge sentence? Without any sort of sentencing of frozen assets. Boy, man, if anything makes you want a decentralized currency, want to have your assets in a decentralized currency, that's one. Number two, governments wanting to be in decentralized currencies, especially governments that are not necessarily friendly to the West. Think Iran, think some South American countries like Venezuela, Central American companies. Think Cuba, they don't have any money anyway. Georgia, Belarus, China. Okay. Think about some of these countries that may think, okay, wow, the US and the West can shut off our central bank from the global system. Now, Vladimir Putin's got a ton of gold. The central bank of Russia has a ton of gold, but they can't convert it to anything because they've been shut off from the system. Emerging markets are likely to really love decentralized currencies right about now and are probably going to sell assets based in dollars and convert to those cryptocurrencies. Phase two of that, central banks have to come out with a digital currency to be in competition with cryptos. And in order for those to work, they probably need to make crypto illegal, transactions in crypto. So long-term, I'm not even going to call it a conspiracy theory, but for their digital currencies to work, Bitcoin can't exist because it would be a lot easier for central banks to freeze you out if you're using their digital currency, even than if you were using cash. Like in theory, Vladimir Putin could send a truckload of US dollars to China and convert it into something they can use. And then China can use those dollars through SWIFT and the other financial systems with their, China has such a strict anti-money laundering rules once you get into mainland China. So anyway, that's a longer term Bitcoin thing. I think that Bitcoin is probably is going to turn into a little bit of a bullish phase because of what Canada did to the truckers and what the West was able to do to Russia. And then it's likely to be staring down the barrel of the major economies sometime in the next 3-4 years, trying to make it illegal to transact in.
I don't think
scary shit.
That long, but
yeah, maybe quicker than that. I don't know. I mean, there was definitely pressure by Senator Warren and others telling the Fed that Bitcoin is all illegal transactions today. That's why I tweeted that. She kept saying, sir, do you know where the majority of Bitcoin transactions are? And he's like, that's really more for Treasury. Okay, great. It's Russia. And do you know about Bitcoin? He's like, that's not really our thing. Okay, I'll answer for you. I yield my time back. That's all she did. Oh, she was horrible.
Well, we do have the potential double bottom still.
We do. That looks really good on a weekly.
So, I mean, you can see it here on the weekly. And that would be above the weekly rotation zone. So that's until that triggers, though, I'm playing it close because there's been a bunch more pressure still with this going on with the stable coins. And I actually think they could use that as an excuse to crack down sooner. Yeah. And just say, okay, we're not gonna do it based off of, hey, we were doing this to just get out the money laundering and the Russia thing. We're trying to save this cryptocurrency market, and we've identified some major fraud and some of this. So we're gonna put some halt to some stuff And if they start putting halt to some of the stuff with like Tether and everything else, then you could see this implode naturally.
Crazy.
So
All right,
we
guys,
should
I gotta go. What time are you on tomorrow morning, Mike?
8. The countdown timer starts at 8.
All right, if I can clear what I usually do, which is I have to do a Bloomberg recording about non-farm payrolls. If I can clear that out, I'm going to join you guys tomorrow.
Okay, well, the interview session will be on, so if you can join, let me know.
Just start without me, and if I could join, I will.
Yeah, and it generally goes for 15, 20 minutes, so you can, if you
Okay.
want to jump on at any point.
Yeah, and if you don't mind, either somebody tweet at me or Mike send me some sort of reminder that it's starting, and this way I'll remember to come on.
Okay.
All right, guys. Cheers, everybody. Thanks.
All right. Thanks, Bob. All right. Let me just get everything repositioned. With Small Mike, there's Small Mike. Small Mike's back. All right. Let's see. I'm sorry I had to skip some of the comments. I just wanted you guys to get Bob's time. Let's Rich Powell will sink this market like the Titanic. Ted, thanks. So it's Bethesda gas is $4.19. Yeah, and I looked today and it was expensive. When I was over, I had to run over to Costco and it was expensive. So sure glad Powell's going to raise rates to 0.25% in March. Oil hits 114 a barrel. That should really knock the price down. I mean, if they had any balls, they'd go with that 50% rate hike. This is going to get inflation is going to get so entrenched. That's why I see the market still, even from a fundamental perspective, taking a hit. Josh, good stuff as always, guys. Thanks. The Fed will seize all your money in the coming crisis. Rich with the very positive comments again. That's why the market will be down 500%. But if we have no money, we can't buy the down market 500%. So we're foobarred. Let's see. What Senator Karen FFS. Oh boy. Since money is just a form of data, Russia may use Excel to trade oil for merchandise from China. There we go. Let's take a look. I wanted to get to some other stuff. Let's get to some of these other, let's do a wrap up here first with, again, you're getting the choppy back and forth. I want to point out a pattern. This is a fantastic pattern. I've talked about this before. It's easy. I'll show it on the 15-minute. So we finally got above this 43.92 area. Coming back, and then here's the other side I was watching. I've talked about this pattern before. You want to add this pattern to your repertoire. Okay? What anybody know what I'm going to talk about this again when it goes out one side and then reverses. I watched for the middle of this horizontal channel as measured from most of the candle bodies, which was right about here. This was a fantastic trade then to go to the downside to get into a shake and bake. Shakes everybody in. You got some numbers coming out, and then you got downside momentum. And look, straight that 43.44, that level even we talked about on the market preview today. So that level holding, I'm just trying to switch cameras, that level holding really nicely here. Coming back up, and a little reversal pattern in here and coming back down. So guess what level I'm going in? Bearish mode, I said again, 43.44 is minor bearish mode, and then we get below this 42.86 major bearish mode. What would change that for me? We'd have to get back above into this area, but we have to be pretty careful of the non-farm payrolls reaction tomorrow morning. But again, the top of the daily rotation zone is right about 4,400. I'm still watching this. If we get upside momentum, especially with non-farm payrolls tomorrow, I'm still targeting this area we talked about before. If we break down, I'm targeting 42.86. And then from there, we'll have time to look at this tomorrow again. But then I'll start watching for the bigger breakdown pattern. Let's see. NAS is trading like a penny stock. There's a lot of back and forth here. You see NASDAQ running into the rotation zone, and we'll update some levels tomorrow morning. But then back below this key support, 14,125. Didn't quite break down. I was targeting 13,920. and we couldn't dip down that far, but that's going to be my first level tomorrow. You see this 13,920 area here, and then below that I'm going to about 13,800. Bullish if we can get a run. Again, the rotation zone is about 14,335 area. If we get a run above there, then I'll target these higher prices tomorrow. Dow, you can see again pulling up in the rotation zone and rotating lower. Dow would have to get above about 33,950 again for me to target. Then it would be today's highs. We start breaking down about 33,500. Then I'm going to target these lower price levels. Crude came off a bit. I just wanted to point something out with crude. We're getting a top-year pattern because this is a bigger head and shoulders right here. So we have two different patterns right here. And this is an upward sloping neckline, but we also have this potential double in here. So you have a potential double bottom, which works. First and second targets are in there. So we triggered that. Then I'm watching for a retest of these high areas, especially this first 114.34 area. We break down below the neckline. Let's just put those targets on here. Hold on. Let me just unmagnetize it for a second because I got to come down to here, and then we got to go from where it breaks, which we don't know where it will break yet, but let's just say it breaks around here. And look, if that happened, it would take us back. I'd be really watching again the right, especially the second target, this 99.39 area coming in line with these prior highs. So there's your two patterns on crude, which are really, really potentially nice. So keep those. You got a bullish and a bearish pattern. Gold popping up, but still inside bar from yesterday. Gold's actually looking a little toppy, and I'm going to have to map this out to see if this is a potential double top. But if we have crude start coming down, I think you'll all see gold start coming down, and we are really ramped up, as I had before with the commodity index. So at some point, I would not be surprised to see this is starting to get a little more toppy in the commodity index. So I'm watching for at least a short-term pullback. This is not something I'd short. And even that head and shoulders pattern on crude, not something I would short. But I use those targets to watch for potential pullback areas. See at this on this 4 hour, we still have the potential on the 4 hour basis, this potential double bottom. It looks like it confirmed, but not really triggered yet. So those targets are 127.30, 128.02, and 128.07. But if we break below the lows from yesterday, then I'm watching. We still have this gap fill coming behind there. Dollar index pushing higher. Next target on that is 98.125. Where else do we say? Yeah, you got it right. It was Jake got it right with the shake and bake. Let's see what else. I like this stock, MP Materials Corporation. MP owns and operates Mountain Pass Mine, the only rare earth mining and processing facility. Other people, can you be on in the next session that starts in about 15 minutes, Didier? We can take a look at that. Just let me know, because I'd rather just get through some of these comments. Yeah, Jake got that. It's sad, but so many on CNBS say one thing and the opposite happens, yet they don't admit to it for the sake of their name. Yep, I know. That's why it's why I do stuff on YouTube and don't want to be any part of that. Don't want to be any part of that. And we have a lot of very intelligent people in this audience, and I hope that's why you're here, because we can have good conversations and do good, pure analysis. And look, when a trade goes wrong, I'll tell you, it hit a stop level. I'll say, look, that didn't work. That hit a stop level. I have no problem with it, because stops are a natural part of trading. But then to just ignore it, they'll say one thing one day, and then they'll do the exact opposite next day, and they'll completely ignore it. They'll just bring the next guest on. And I remember that stuff that Bob was talking about with copper, because Bob had me look at a chart, and he's like, you see a trade here? And I'm like, no. And I'm like, this is up here. There's nothing to do. It's sit on your hands until a pattern forms, and there's nothing to do. He's like, yeah, yep, that's what I'm seeing too. And there's just nothing, but they don't like that. It's constantly that. It's literally, that's more clickbaity than some of YouTube at this point. Let's see what else. Okay, great. Well, so we'll look at some of these stocks in the next section. And this is the kind of market we're in. Oil down because of Iran rumors, oil up, oil down. We're in these very volatile markets. That's why I can just put up the technical patterns. We got the levels. And then if a trade sets up, we take it. If it doesn't, we don't. And as the other comment, NASDAQ's trading like a penny stock, but these are the kind of environments, even if you stripped out the Russia-Ukraine thing, we'd still be trading like these volatile penny stock stuff because of the nature of when markets start rolling over, everybody's still the dip buyer thinking they got to catch that low and everything. Oh, wait, I got to get in now. I got to get in now. One headline rolls across. I got to get in. And then the next headline, which is bearish, which reinforces the bearish bias, is like, oh, crap, I got to get back out. It's just the schizophrenic market, and these are tough to trade. That's why I have my long-term positions. I know the long-term signals. If there's a short-term trade, I'm willing to take it, but still with stops and everything else. Technicals at least give you, technicals, I can't say they always work. They always are tradable from a technical perspective. Like, does every double work? No. Not at all. But they work a hell of a lot better than trying to figure out is it bullish or bearish based off the latest headline. Because headlines I think are bearish. The algo traders, they're trading them bullishly. I think stuff's bullish and they're trading them bearishly. Now there's stuff we can agree on, but I'd rather just sit and look at technicals all day long. It's going to, the technical analysis, if you get good at it, it's what I look at. I'll look at the news feeds and everything else just to see okay, look, we got momentum bars going the upside. What just hit the news feed? But am I taking a trade off? I take a trade off the momentum bars if there's a setup for me, but I'm not taking a trade off there because something rolls across the news feed. Yeah, the reason why I cut cable in 2018 and life's so much better, I stream everything now because it's just, this so much stuff is garbage. I remember when there's actually some decent, it's been years, but CNBC had some decent stuff years ago, but it's been a forever since then. It's like clickbait meme headlines and all this garbage stuff coming on. It's just utterly ridiculous in my mind. So with that, and this is why you always wait till the end of the day, and just in case somebody's not going to tune in the next one, I know Ken asked a question this morning. I'm jumping to a stock real quick because he said, well, what about the weekly on Tesla? And I said the week's not over yet because remember, this was a big green bar earlier, and now this is over. This is why you have to, on a weekly pattern, it ties into what I was talking about. You have to wait for the week to end. You cannot just say something is or is not before the pattern is ended. That's where I just want to leave that right now. And Tesla not doing well lately. I'm still bearish on Tesla long term. Nothing changed even with this rally. Was there some ways to trade it to the upside? Yeah, but now there's no good risk reward, even if it continues a little higher. And I'm expecting another major rollover. Until it gets that rollover, it's now sit on the hands. With that, everyone, if you're new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term viewers, please do hit that like button and leave some comments. I will be going live in under 10 minutes again. So if you want to look at some of these stocks, like this MP that Didier put in there, then we'll look at that and any other stocks. We can do a little quicker take on Tesla and some other things that we want to look at. I know I'm just scrolling back through these headlines. I'm just seeing before I close this down. Where do we go? I think somebody wanted Apple too, so we can look at Apple in there. Yeah, William wanted Apple, so I will look at Apple in the next session, and we could check in on Costco. I know they had after market hours earnings. So until then, I will talk to everyone later. Bye for now.